Let's bring in David Zervos, Jefferies chief market strategist, to this conversation. As we mentioned, Halima is still here with us. So is Mike Santoli. David, want to get your thoughts on this, especially given the fact that we are tonight, even though there are a lot of known unknowns, that tonight it is a muted response in stock futures and oil is higher, but not surging.
Morgan, I think it's more than just a muted response. I think it's a response that most people would think is much, much smaller than many would have forecast given the weekend's actions. So I think you have to sort of step back and ask yourself a little bit about what are the scenarios the market is pricing. There's the obvious scenario that I think has been discussed here and is being discussed by many, that is an escalation and risks, and we're going to go down this sort of very difficult path. But there is another scenario, which is this is a beginning to an end of a period where we had an isolated Iran, we had all the sanctions, we had all the risks and difficulties, and there could be a solution. There could even be a wider solution as this maybe extends itself into the Russia-Ukraine world, and this may be something that's about to occur where many of these conflicts start to get solved, peace through strength solution that this president has perfected, or at least so far has perfected.
David, that's
the market I think the market has two big scenarios. One is a sort of potentially a really, really good outcome, and the other is this really, really bad outcome. And there's sort of a stalemate in markets of which way you go.
Yeah, and I think obviously that sort of latter view, I think Mike Santoli, I think he used the word peace dividend. I think that view is obviously winning out right now because the markets, they are not collapsing. This is not a markets in turmoil special, right? The markets are not down 1,000 points. And I've read some notes, David, today that sort of suggested that if this sort of takes Iran out of the bigger picture, yes, they may mine the Strait of Hormuz, they may do some things that are agitating, but if we don't get the massive response, that maybe there is some kind of I hate to use the term peace dividend, but you know what I mean, because we're kind of not there yet, that may ultimately benefit the market, David. Do you see that?
I think that's actually something you have to put a 20, 30, maybe 40% probability on. And once you start doing that, and markets, look, that's all markets do. They put probabilities on scenarios. So yes, a spinning out scenario could easily be the one, but your peace dividend style scenario, which also brings with it maybe more peace dividends in other conflicts like Russia, Ukraine, or even what we've seen in China and Taiwan escalate. If somehow this strategy works and we bring Iran back into the fold of some form of normalcy and normal diplomatic relations and their oil into normalcy again, that's an incredibly different world for energy, Brian. I mean, one that could be significantly lower in price. And if you go down the next path of, hey, this strategy's worked, this peace through strength, and this brings Putin to the table, we get the Ukraine thing going. I'm saying the market is calculating probabilities here. And I think the reason for the muted reaction is not that it's unimportant. I think it's actually very important what happened this weekend. What it did is it sort of expanded on both sides, good and bad, what could go on next.
Steve Leisman, we also have a stronger dollar in the wake of everything we're seeing right now. And I got to think you got to watch Treasury yields even more closely right now. So Mike Santoli was just talking about stocks taking their cue from crude, but how much do they take their cue from the bond market in this environment, depending on how it plays out as well?
I think they'll take some. I'd push back a little bit on David that those of us, and I know it includes David, that lived through the Iraq War are a little bit skeptical about the positive outcome of regime change in that process. I would tend to think of the probabilities of outcomes being the status quo or worse. And the problem is it's difficult for the market to understand Iran's possible negative reaction here in that I think the president has probably done a decent job to this point anyway of targeting the initial military action and then sort of threatening much worse. So it really, whoever said earlier, the ball is in Iran's court, that is accurate, I think, very much so. I'd just be a little skeptical of regime change outcomes. As for the dollar, we're seeing it a little bit of flight to safety here, but not big. Not big. I mean, it has already been down about, 10, 11%. Before that, and it's not really, it's not a huge flight to safety, and it's not a huge sell-off here. And I think you're right, Morgan, to look at the long bond as a way that the market will take its cue from inflation. But in general, if this is a short or temporary spike, it should not be a big reaction.